Well, hello, traders and investors. I'm LA Little, and this is your daily NeoTA wrap. Take a look at these markets. We're doing it from a neoclassical perspective. That means we're looking at supply and demand on the charts. We're asking ourselves each and every day, what happened today, and what does it tell us about the coming ones? I do this show 4 times a week, every Monday through Thursday. It's broadcast out before 10 o'clock Eastern Time, archived on YouTube, and it's under the channel LA Little. If you want to subscribe to the show, just reach up in the right-hand corner and do so. Anytime I push public content, you'll get a notification. It's an easy way to stay up with what's happening, and there is a lot happening, and most of it is to the upside. Here it is again today, a continuation push, and that push, as you see here, is a pretty good one. Considering the fact that we also got a huge push up yesterday. Going across the indexes here, index not that much comparatively. You got a little bit of boost here. The standout was on the Russell, 1.6%. Yesterday it lagged. Today it is pushing up higher than most other things. Oil gets a nice bump today. You got an OPEC meeting this weekend. But the real juice was over here. It was in Europe. You had Draghi coming out today, basically doing what looks to be a taper, but leaving it open-ending and say, hey, he's taking a note from the Fed. We'll do whatever it takes kind of thing. And, he's said that many times before. He leaves it open and says, we're data-driven. We're going to do what the data tells us, which means we can do whatever we want. And that's what all the central bankers are turning to. You see it in Japan. You saw it in the U.S. You're seeing it here in Europe now. And that's allowing that market to move higher. So you get a pretty big push today. You got gold and silver trading down. You got the bonds trading down. And why is that? Well, look at the dollar. Big reversal off the euro. The euro actually spiked up on the taper idea. And then when the rest of the story was told, the euro dropped like a rock, down over 1%. And the dollar soared as a result. Let's take a look at the charts here. We'll start with the S&P. So you get a continuation move, volume drying up a little bit as you're getting up there, but you're over the highs. You stay over the highs, you can go higher. And, I hate to even suggest this, but you do have an ABCD structure that is massive, right? And we could just quickly do the points. What is this, 2083 up to 22, so that's about 137. And if we take and add that on to, we'll use this one, that takes you 2300, 2310 almost. That's the projection. We're sitting at 2245 or so, 2246. So in other words, if this were to just continue on and actually fulfill this ABCD structure, you could push another 60 points on top of what you've already seen. And this has been a massive move already. That's the S&P 500. NASDAQ. Let's look at the NASDAQ. Now, the NASDAQ, the index in particular, have been the laggards. What we see there is a push over the highs. It breaks over them and has new highs. So you get a swing point high, you get over it, right? Before, if you remember, we were watching here. We got over it. We held. That led to the big move. Now you're breaking another one. Will this one actually project higher as well? Usually you break a swing point high. If you don't extend, right, you're going to come back. But you've already extended 5 days. So it gets harder and harder to keep this kind of juice going. NDX, a little bit of a different story. The NDX, of course, being the laggard. Part of that has been big cap technology, although they got some juice the last couple of days, but it's really the biotechs that have been holding the NDX back more so than anything. NDX is coming up to its next point, and that is the breakdown bars high. This is the only one that still hasn't made new highs. A lot of times, as I said before, what you'll see is you'll see it come up and hit highs, right? And then that's when everything gets its pullback. So a lot of times the laggard is the last one to push up to those price points where everybody else has already exceeded. And if we go to the leader of the group, that's the Russell. Now yesterday the Russell actually was the lag comparatively. Today, nothing like that. Today just shoots up. And you're talking about, ABCD structures. So check out this one, 1156. What is that, 13? It's almost 200, just shy, 190 points. Project that up, 1500. That one's hard to believe. It's 1381 now. You think we got another 120 to go here? I don't know, folks. I've seen stranger things, but right now, this is one heck of a move. Now, consider where we are. We're first week of December. You basically got 2.5 weeks left, 3 weeks. In another week, the volume's going to dry up, and then it's just going to be a drift. Usually that's a grind in higher into Christmas, the Santa Claus rally thing, and that pushes you out into January. Now, this year's been so strong, one would wonder, is like, okay, can you do that? Well, think about it. I mean, you probably got lower taxes next year. Do you really want to sell anything this year? Probably not. You've also got this performance anxiety that's forcing this thing higher and higher. That's what's going on now. So it's hard to see what's going to stop this thing. You're probably going to get some sort of a pullback somewhere. But one more time, just like this last one we got, it's going to be a buy. We talked about this last one. When it pulls back, it's going to be a buy. It was. I suspect the next one now, the way things have set up, it's going to be the same way. And that's, again, kind of hard to believe, but that is where we're at, and that's what's happening. And what's driving this more so than anything is the financials. Whether we're looking at the financials in the large cap space, or we're looking at them in the small cap space, it doesn't matter. They're all moving, and they're all moving big. Here's the XLF. Look at this massive move. I mean, this thing didn't even take a break. Usually you get some sort of a pullback, right? You saw the pullback elsewhere. Where's the pullback here? You never even got it. You just got the pause and a continuation move off the pause. And this isn't the exception. This is the rule when it comes to banks. Whether you're looking here, if you're looking at the broker dealers, for example, or if we go to the small cap banks like, say, KRE, look at this one, same thing, even stronger, right? They're all doing the same things, folks. This is what's driving things. This one is what's really driving the Russell. A continuation move, volume expanding today as the regional banking sector moves to a new high. And before I leave this screen, I'll pop up one more and just show you how major this move has been, and that's the broker-dealers. Take a look at the broker-dealer chart. Same sort of action, just a fantastic move to the upside. Now, there are laggers out here, things that aren't working. And, there's no reason, and I've been preaching this lately because I hear a lot of people doing this, there's no reason to trade in those things that are lagging. You got a big drop in the SOX, but the SOX actually makes a new high today. I wouldn't have expected that, but that's what it does. And so the SOX isn't the laggard. The laggard is the biotechs. Now, they were trying to gather their steam. They were trying to get back on track. But then Trump came out and beat them down again yesterday or day before yesterday. Today they hold, but it looks like it was an inside day. Yeah, inside day, so that doesn't really tell us anything. This is a group that simply can't get off the bench. I mean, they've been beat up, and they've been beat up bad. They're not the only sector that's had a rough time. Of course, they've had the worst time. I mean, they had a big push up, and they're giving it almost all back. But you have some sectors that simply aren't even participating. Here's the Trump election. Let's get the date here. It's about right there, right on the 8th. Look at the staples sell off, and yeah, they're getting a bounce here, but they can't go anywhere. Anything interest rate sensitive has had a tough time of it. In addition to the biotechs, here's the utilities. They haven't been able to get anything going. If you go over to the REITs have struggled as well. But outside of those groups, in healthcare in general, these groups haven't been able to participate nearly to the extent that you've seen elsewhere. I thought I'd take a few moments here to look at a group that I usually don't look at that much. I have a hard time trading the airlines, but the airline's getting a breakout. You can see it here with the green arrow. After an extension, they do a nice consolidation and nice big spike up, just like everything else yesterday. It's also trying to break out and will break out on the weekly again. This is a continuation move. The only thing I dislike here is almost everything on the intermediate term time frame now has extended past where they should in terms of the ABCD structures, so it makes it hard to keep buying them. But they all keep going up. I mean, even Boeing. Here's Boeing. Boeing took a beating from Trump just the other day, but this thing is making new highs. It doesn't look like anything in the airline sector is going to have any kind of a pullback, just a pause, a continuation, even those things that Donald Trump gets all over. Here's Love, one of the stars in that sector. That one's going back up to hit its highs. You just go down the list. They all look good. The only one that's a little different in this group is General Dynamics. Now, General Dynamics, it has a component that's, of course, airline driven, but it's also defense and so forth. And today it got a bit of a hit. Not sure what the news was here, but it's certainly coming back in. I think if you look across most of these indexes, most of these sectors, this is what you have to be concerned about, in that, after such an extensive move, in almost in all cases, ABCD structures that have either completed or just about completed, this one was a big structure on the daily chart. As they continue up, right, you get a situation of where you can just get a fast drop. It's harder to play individual stocks the more stretched you get, because now you can get individual news, stock-specific news that can drive a stock lower. It's much easier to simply go over and get involved in the index itself or the sector, which is, in this case, JETS is an ETF that covers the airline sector. And you can see this one, you get a hit in General Dynamics, but you're not going to get a hit overall, in any significant manner. So one thing you might look at as this market continues to extend is to move away from individual stocks just from the risk perspective, right, and move into ETFs instead, because there your risk on the downside, that means everything has to go down, or the majority of the weighting in this has to go down in order to take this whole thing down. And I don't think you're going to get a broad-based pullback at this point, so it makes it a lot safer to play it. So just an idea as we spin higher and higher. Where do we go tomorrow? Well, it's Friday. You usually get a little profit taking on Friday. You may see this thing kind of at least levitate instead of going higher, or maybe give you a little bit of a pullback. But there's nothing in the charts anywhere suggesting a pullback yet. Have yourself a great night and a great weekend. I'll catch you next Monday. Take care and good night.